All right. Hello, everyone, and welcome to today's market check-in with myself, Greta Wall, and Derrick Oldensmith. Derrick is a professional trader with T3 Trading Group and the leader of T3 Live's Pro Desk virtual trading floor. And Derrick, I would say today is no better day than to be getting a professional's insight on the market. How's it going out there today for you?
These are the days that we live for is really the bottom line. If you can survive it, it's the day that you live for. If you don't survive it, then obviously it's a different situation. Just an incredible few days and an incredible morning. I mean, the gap down this morning was insane. We got down to some of the most extended levels to the downside based on the way that I view extension that I've ever seen in my entire career. Maybe not the most, but top 5, definitely up there. So just a crazy morning. If you want, I can share some charts. I can go over, kind of what the game plan was this morning. So
real quick, let's get some disclosures out of the way. So we're talking about trading the market meltdown with Derrick here, and a meltdown it was for sure. We've had a bit of a recovery, but I'd say we're still definitely in meltdown territory. Just quick look at the positions that Derrick is currently holding as of this stream. So there's his longs, his shorts, just disclosure there. So everyone knows what you're in as we talk about your game plan for the day. We had your charts up earlier, but they're gone. So let's reshare your screen so you and I can talk through some stuff, and we can make sure to show people the levels. I'm not sure why it disappeared, but that's okay. For everyone who's with us live, if you have any questions for Derrick, be sure to leave them in the comments, in the live chat, wherever you are. If you're on Twitter, Facebook, YouTube, etc., and we'll make sure to answer all of them. Okay, there's your charts are up. All right, so Derrick, I mean, coming into this morning, you saw the futures last night, I'm sure. What's your reaction when you see what's happening in the market and you prepare for today's session?
So, I actually try very hard to not look at futures the night before. I'm not a futures trader. I'm an equity trader. So all looking at futures will do for you the night before is give you anxiety. So as a rule, I try very hard to not look at the futures the night before. It was impossible to do that yesterday, just between my curiosity on where we were and the abundance of text messages that I was getting from everybody about, oh my God, do you see where the futures are? Do you see how dead tech is? Do you see what's going on in Japan? So it was unfortunately impossible to avoid. And then it led to a tough night's sleep for me. I had some overnight long exposure from Friday last week still in my books. And knowing that we're going to be down big, it's like, doing the calculations in my head last night, lying on the pillow instead of sleeping and getting the rest that I need for a day like today of, oh my God, how much am I going to be down tomorrow morning when I wake up? How much am I going to be down at the open based on the positions that I have open? And already thinking about, well, what's the right thing to do? And I generally think that that's a waste of time of an exercise doing that the night before, because especially when the futures are moving so rapidly, you have no idea where it's going to be by the time the market actually opens up on, Eastern time. I can start trading at 4 a.m. Eastern. So I ended up getting up at about 5 o'clock this morning and seeing where my positions were and seeing how much down my P&L was and trying to figure out what the next steps were. And the bottom line was, and I gave a fairly aggressive morning meeting this morning, was that you had to buy this gap down. You had to buy this gap down. These types of gaps lower, especially when it's like a day 3 down and the market is going into some sort of a almost panic situation where you get this extreme downside extension. This happens very rarely. And pretty much every single time I've ever seen it happen, it's led to some of the best, at least short-term buying opportunities for profit that I've ever seen. So the morning meeting I was given to the team this morning was, I don't know if the opening bar will be the low of the day or if we see a little bit of opening panic selling. But the bottom line is look for your signal to buy this morning and do it aggressively, whether that's off the opening low or whether that's after an initial little bit of maybe 15 minutes of panic selling, a pivot low comes in and then you buy off that. You got to have your buy button ready and you got to be ready to take advantage of it aggressively. And it happened to be that it was right off that first 5-minute bar. Second the market opened, the cues were given a little bit of a downside tail, and that was the opportunity to take advantage of it. But I think I've still got my screen share up. I'm also trading at the same time. But right now I got a chart of the SPY up, and you can just see the gap down this morning. You can see the degree of extension to the downside. We opened at 510. We were below that pre-market, but even at like I guess we opened a little bit above 510 and made a low at 510 real quick. And again, pre-market, we were even below that. But if you just use 510 as an example, so we opened a little bit above, but at one point we were below pre-market. That the way that I measure extension broadly is how far away the market is from the ADMA on the daily chart. And I've got like rules or zones that I consider to be more extended or less extended. So typically with an SPY or a QQQ, I consider anything more than $10 extended away from the ADMA to be like an extreme move. So the ADMA right now is at 538.30. So a $10 extension would be 528.30. We were at 510 this morning. We were $28, $29, even more than that pre-market extended away from the ADMA on the daily chart. I think that in 2022 and early 2022, we had two examples in the beginning of the bear market where we got to about this much extension, maybe even slightly more. One of those was the Ukraine invasion of Russia. And if you go back and you look at that trading session, that was another day where, we opened up like 30-something dollars extended to the downside from the ADMA on the daily chart on like a day 7 down or something. And the buying started literally the second the market opened. And it was one of the greatest buying opportunities of the entire calendar year. So this is obviously a different situation. It's a different market. There's a different headlines that are causing this downside move. But the opportunity is the same. Mentioning the headlines real quick, the one thing I would talk about is if you're watching the news, and I'm actually at my dad's house right now. So when I saw him this morning, he had, I grew up in Long Island, so I'm in Long Island. He had like the Channel 12 local news on, if anyone's from Long Island, and they were talking about the stock market, and they're talking about the terrible jobs report on Friday that is giving way to this market crash that we're experiencing. And sure, the jobs number that we got on Friday was less than expectations, and that was after we had a weaker ISM number as well. So you are showing a degree of economic slowdown, but that jobs number was still a number where jobs got added. This move lower, maybe the economic situation acts as a little bit of a catalyst, but this move lower is a result of positioning. This is a positioning sell-off. This is because everybody over the course of this year got so comfortable just being long, high beta Mag 7 tech and got so comfortable shorting vol that when a shakeup actually occurred, everyone's caught off sides. And it was just, we saw last week a lot of forced institutional selling. And then that was made worse by what's going on in Japan. What's going on with Japan, what's going on with the yen, it just led to a global de-risking move. That's really what's happening here. It's a global de-risking move, and it's caused by positioning at least as much as it's caused by the economic numbers, probably significantly more than it's caused by those economic numbers. But of course, if you're watching Channel 12 news on Long Island, you can't, be the news anchor and say, well, we're seeing a really big sell-off this morning because of positioning. It's just, it's not going to grab headlines. It's going to make people change the channel. But that's really what's going on here. And again, today was a day to take advantage of it. Now, what happens on this bounce from here? We still have a lot of downside extension. So until the downside extension in the daily chart for the SPYs, Qs, and IWM is fully satisfied, which will probably take at least a few days of either continuing to bounce or bouncing with some sort of sideways action combined with it, until we are no longer extended away from that ADMA on the daily chart. Very broadly, I'd rather be long than short. And I've been bearish. I've been bearish, since mid-July, when we hit that options expiration period. And I was talking about and warning. I think even speaking with you, Greta, in the last couple of weeks, I was warning as we were coming into earnings season These Mag 7 companies, they're up so much, and there's going to be concern on CapEx spending. Lo and behold, earnings reports come out, and guess what? All the earnings reports were good. I haven't seen a bad earnings report from big cap tech yet. Not a bad one, at least, but most of them just weren't good enough considering where the market actually went to give continuation. And then you combine that with where we were positioned, and you get this sell-off. And again, it's an opportunity, especially for shorter-term traders. This is potentially one of the best short-term trading opportunities of the year. So I really hope everyone on my team took advantage of it, because I was gung-ho this morning. We got to be buying. We got to be buying.
Mm-hmm. Another wrinkle in this whole, situation, we have the positioning, we have what happened in Japan, we have, we do have those weaker economic numbers, and you also have today the news of Buffett's, or over the weekend, the news of Buffett selling over 50% of his Apple stake. A huge hit there for that stock, and of course, just for the Mag 7 names. We can opine on what ifs or whatever, but how much of that do you think impacted the Q sell-off in particular versus the Dow and the S&P?
It had a big impact for sure. Apple and Nvidia, which are two names that had negative news this morning, are like two of the largest three. I think I always forget where Apple's always kind of back and forth a little bit with Microsoft. Nvidia has been number one. Maybe in the sell-off it pulled back a little bit, but these are two of the top three companies in the world by market capitalization. I mean, we're talking trillions and trillions of dollars here. Warren Buffett is the greatest investor of all time. Warren Buffett already was liquidating a lot of Bank of America, and then we get the news on Saturday that Buffett sold half of his Apple stake when he's been the biggest Apple investor that's been out there. And obviously that just breeds a ton of concern. Right after selling off Bank of America, raising all of this cash, one of my traders mentioned this morning, and probably is worth fact checking, but one of my traders mentioned this morning that after those sell-offs, Warren is sitting on more cash than the Treasury or something. I don't know, or the Federal Reserve. I don't remember. It was some crazy number, and it's worth fact checking. But that's where we're at on things. And Warren, just being known as the greatest investor of all time, if he's raising cash like that, it's got to make you ask, like, what does he know on the macro front that I don't? Because he's obviously got more information than I do. But there could be things behind the scenes there that we don't know. He's obviously working his way towards retirement, even though he's still involved to some degree. Maybe he just wanted to raise this cash and deploy it elsewhere, though we haven't seen that really happen yet. Though we have seen him continue to buy, maybe not last week, but continue to buy like the Oxys of the world and continue to buy energy. So he obviously thinks that there's some value out there somewhere, but obviously the Apple headline creates some concern. And the Nvidia headline, I mean, again, it's just such a large market cap. It's going to move the Qs in such a big way. Nvidia's had an incredible snapback this morning. Apple has had an incredible snapback as well already this morning. How much does that news this morning actually impact the forward earnings and forward revenue from Nvidia? I really don't know. But the market didn't like it, and then you just combine it with everything else. When the market's already fearful, and then you're getting hit with other pieces of bad news, especially ones that you weren't expecting, it just adds to it. But overall, again, for the moment, these are incredible buying opportunities. I mean, as much as there was bad news this morning on Nvidia, the stock was $140 in June, and it was $90 this morning. And as much as it's not good that Warren Buffett sold Apple, does it change the narrative that people have been buying with Apple on the next wave of iPhones because of AI and the expected spend that's going to occur there? I think not, but we'll see.
So, the whole, the headlines say the sell-off today is about recession fears and recession fears mounting. And there's all this talk about the possibility of an emergency rate cut from the Fed. You and I have talked about the Fed a lot. Where do you stand on, if it's needed, what it would do to the market if the Fed were to cut in an emergency, and if you think it's even like an actual option at this point?
Yeah, I was wondering when I saw that headline from Bill Ackman this morning that he is saying we need a 75 basis point emergency cut and 75 additional basis points in September. I think that's what it was. I was imagining him saying that like when he was crying during COVID at the bottom. Um, this is ridiculous. The first thing I told everybody in the morning meeting this morning was take a deep breath. The sun still rose this morning. My phone still worked. I'm going to be catching a Long Island Railroad train back to New York City after the close today. I'm pretty confident that the Long Island Railroad is still up and running. There's no like end of the world extreme situation that I woke up to this morning, and hopefully that never happens. I have been in the camp for a while now that the Fed should cut. I genuinely believe that the Fed should cut. I think that I've spoken about it a lot. I think that they are creating a massive separation between winners and losers right now. Winners being kind of the established money and losers being everybody else. A couple examples I can give is think about just regular people for a second. Think about, the wealthier person who already owns their home, or maybe doesn't own their home, but is locked into a 3% mortgage here in the United States. And now interest rates just went up so much that they can have their cash sitting in a bank account and get over 5%. Yet they're paying 3% on a mortgage. Think about that versus the new family formation individual who now has to pay so much more money to be able to buy a home and finance their mortgage. Just a few years later from where interest rates were zero, like that person's in a really, really bad spot. You can also think about in terms of companies, you could think about the Microsofts and Apples of the world that have more cash than they could like ever use. And as a matter of fact, like a lot of them are just blowing it because they're trying to figure out a way to use it. And they're locked into, Apple took on that 40-year debt in the height of COVID at like, I don't remember, under 2% interest rate or something like that. Like Apple doesn't care where interest rates are, if they're higher or lower, unless you see the consumer really start to not spend. But if you're a startup company and you need to raise capital for your ongoing business right now, you're in a terrible spot. So in some ways, I think that cutting interest rates isn't inflationary at all, and might even be deflationary, because that the people who are spending the most money are the people with 3% mortgage who are getting 5+% on their cash right now and can just keep spending and spending and spending. All of a sudden, you tighten that up a little bit. They're still got a 3% mortgage, but now they're getting 4% on their cash. Maybe they're not jumping out to spend in the same way as just an example. So I've been saying for a long time that the Fed should cut, but the idea of having an emergency rate cut or all of a sudden doing 50 basis points of cuts in September because we only added 100,000 jobs last month instead of 170 or something like that is just like ridiculous to me. And that's not how the Fed operates. The Fed are the ones who are going to take the deep breath this morning and say like, okay, the market's getting smoked this morning because of some fears, but what does that actually change for us? It hasn't changed anything unless this sell-off becomes so insanely vicious that it begins to create a feedback cycle where people see their investments go down and then stop spending money. Outside of that, I don't think the Fed woke up this morning and saw the market down the way that it was and said we need to start cutting. With that said, just because part of the sell-off here is happening from the move in the yen, and the move in the yen is related to the fact that the Japanese central bank is starting to hike and the U.S. is not yet cutting, it probably would just be another reason why they should get started cutting. But I don't see the Fed coming in and acting rashly and saying like, oh my God, we need to cut now. It's never how they've reacted ever, really. I mean, even during COVID, they did come in and do emergency cuts, but this isn't COVID. This isn't COVID right now. This is a slight economic slowdown. And then we even had an ISM services number this morning that came out hot and helped the market bounce a little bit further. This is not like we just entered into a recession yesterday. So that's my thoughts on it.
Do you think it'd be beneficial for the market? We get Fed speakers I haven't looked at or I've looked, but I can't remember on the calendar. We don't have many Fed speakers this week, but a couple. Um, do you think it would be more beneficial for the Fed officials to come out and kind of just speak and, kind of tell everyone, hey, we need to calm down. We aren't falling off a cliff on the economy. It's not time for any emergencies. The market is not the economy, technically. Would you think that would be helpful to the market, at least to get some calming comments from Fed
Yeah,
officials?
we saw one of the Fed officials talk this morning,
Hmm.
right before the market opened. I don't remember who it was. But basically,
Goolsbee, the Chicago Fed
supposed to be, that's
president.
what I thought. Yeah. So
Yeah. Hmm.
basically what he said was, you know, a slight slowdown in our jobs number on Friday does not mean that we're in a recession. Like, everybody relax, which is exactly the same thing that I'm saying. Um, the bigger event will be when Jerome Powell speaks in Jackson Hole, which is August 20th or something like that. I forget the exact date. That'll be the bigger event. There was a situation, was it in 2022? I get the years a little confused sometimes. I think it was 22. Might have been 21, where Powell spoke at Jackson Hole in that August and actually triggered a big market sell-off. So that's going to be the big event, but we're still, a couple weeks away from that. But I think that what we saw from the one Fed member this morning is going to be what we'll just continue to hear from Fed members, and it's exactly the same thing that I said. Everybody take a deep breath. This is not the end of the world that just happened today. We're still adding jobs. We're not even losing jobs. We're still adding jobs, last month. And this is not what a recession looks like. So that's
Yeah.
where we're at.
A question from YouTube. Question about IWM. It's not a good 3-day sell-off. Are you still bullish on small caps?
It's not a good 3-day sell-off. So, right. So great question. One of the things that we were asking ourselves in July, in the second half of July, as we began to expect the Qs to sell off, is, with the Qs selling off, does that lead to a further rotation trade? Or does there become a situation where correlations increase? And what we said was, if the VIX really begins to spike, that's when you'll see correlations increase. If you remember, up until very recently, for the last couple months, we had seen this dispersion trade, where the Qs and the IWM were literally trading inversely from each other. And then you could even see it on a 5-minute chart, and that really blew up to some degree in early-ish July, in the second week of July, when the IWM broke up in a massive way as the Qs were breaking down. So they were trading inversely to each other. That's still when we had a very low VIX, and it's still when we had very high gamma in the SPX. So when you've got that high gamma, it's very insulating for the S&P. So what that means is, if there's a sell-off in one area of the market, but the S&P is not going to be going down big, there inherently has to be buying in another area of the market in order for the S&P to kind of stay balanced. And that's what you see when you're in a high gamma SPX environment. That's where we were in the second week of July when the IWM gave this breakout. Now, if you fast forward a little bit, you get to options expiration in July. Options expiration, when it happens every month, is one of the events that reduces gamma in the market. So it increases the probability that you can get bigger moves that actually occur in the market. And at the same time, I became bearish on the Qs. And the question was, can the Qs continue to sell while money gets rotated into the IWM or not? The answer to the question, I thought the answer was yes. Let me start by saying that. I thought that the IWM would hold up at a minimum while the Qs sold off. But the big asterisk that I was saying was that changes if that gamma number starts to become greatly, greatly reduced, and or the VIX starts to really increase. Because if the VIX really begins to increase and gamma gets to flat like it did, or gamma goes negative like I think it did, then all of a sudden that dispersion trade, which is what you needed for the IWM to move higher while the Q is moving lower, is gone. That trade's gone, and now correlations increase and everything begins to move together again. And that's exactly what we saw. We saw, last week into the sell-off, the VIX really begin to step up and move higher. And then the movement on the VIX this morning was like the biggest, I think someone said the biggest pre-market upside VIX move ever or something like that. Again, I'll be catching up on a lot of my research after the close today, but that's generally what happened. So now that the VIX goes up, correlations increase, everything sells together, and that's where we're at. So unfortunately, the IWM rotation trade went out the window for now, and it's just a matter of if we can get the market to slow down enough where the vol selling begins to come back in, an underlying bid in the market begins to come back in, and the dispersion trade can come back in. And then if all of that's able to happen, which will be difficult to happen, I think, in August, if all that actually begins to happen and the dispersion trade comes back, who's the winner of it? Is it back to being the QQQ after this sell-off? Is it back to being the IWM after this sell-off? The way that I would try to judge is based on technicals. That's why I was being bullish still on the IWM. The IWM was great, given this great bull flag. Just like a week ago, there's this beautiful bull flag in the IWM. On the Fed day, we broke out through 225 resistance. Looked like we were going to give continuation. Then there was that upside shooting star candle that led to that really big, now 3-day sell-off. We have to have a better idea of what the technicals look like when and if we see gamma increase again and the VIX decline enough to where that trade can come online. But it's tough to do that. So the way that would happen would be if your realized volatility, your day-to-day movements in the S&P begin to get reduced. If you can get the SPY, which is now down 2.65% as I'm talking, and was down much more than that at a certain point today, if you can get the movements here to start becoming the average movement less than 1% again, or less than 0.5% again, that will bring back all the vol selling, the VIX comes down, the increase in the gamma, and you go back to kind of the old regime of the market. But if we continue to get these, daily 2% plus moves in the S&P, it does the opposite. It keeps correlations high. And if anything, we're still at a point here where there can be forced selling in the market. I came out as a big bull this morning because of the degree of downside extension that I feel is something that you have to take advantage of in the short run. But I'm not a big bull necessarily in the big picture. I need to get more data and more information after this market actually slows down a little bit, after we're not as extended as we are right now. And then I can begin to kind of formulate a thesis of like, okay, the buying can come back in, because if you're continuing to have these daily 2% plus moves, you're going to be seeing a lot of continuation of forced systematic selling in the market. And that's going to make it very difficult to get more than just an extreme oversold uptick like we're seeing this morning. Hope that helps.
Yeah, I have a question. Yeah, you're good. There's another question from YouTube, and I know you can't answer this like directly. You can't tell someone to buy something, but they want to know, can I buy NVIDIA at this price now, 101? So more just kind of broadly give your thoughts on NVIDIA at this current spot. We'll just, again, really quickly want to show your positions disclosure. These are positions that Derrick is currently in for compliance purposes. So go ahead and share your thoughts on NVIDIA at the point we're at now after, a bounce this morning.
So I'm not in the business of telling people
right
buy or sell stock kind of generally. And if anything, I made a very rare exception this morning when I was kind of pounding on the table that we need to be buyers today. We need to be buyers today. I'm more of, I want to teach you a process and teach you a way to create game plans and create a process where the way you answer that question, should I buy NVIDIA at 101, is to review what your process and your game plans tell you to do. And then the answer is inherent in your process and your game plan. That's what I would say. And obviously, Tommy, I don't know you directly. I don't know your account size. I don't know anything about you. So, I can't give you a direct recommendation like that. So I'm not going to tell you to buy or sell. I would tell you that 96 was a big support level that I was looking at, and that off of 90 was an area this morning that I was interested in buying. I didn't buy NVIDIA this morning. I did buy AMD. AMD traded really well. It's green right now as we're talking, which is incredible. There's not much out there that's green, especially in tech land. But yeah, the bottom line is assess your process when it comes to NVIDIA. And I don't know what your timeline is. Are you buying this as an investment that you're looking to hold for a year or 5 years or 10 years, or are you looking to take a day trade here? If you're talking about a smaller term trade, I would say that, buying here now is a little bit tricky after the degree of the bounce that we had, but you can look to see if Nvidia holds like that. This I don't know if my chart's still being shared, but this like 98.50 to 99 support zone that the stock created a little bit earlier today, you can look to see into this pullback if it holds that zone, and maybe that can be an area that you might have interest in if it coincides with your game plan and your risk tolerance and all the other things that are necessary to succeed as a trader. Are you muted?
Yes, I am. Sorry. You came into this morning looking at the gap down as an opportunity for trading as a short-term trader. What do you think about this? My wording here. What does it take for you as a trader to look at a market that is absolutely collapsing on, well, everyone else is saying, market collapse, margin calls, all these things, like detrimental headlines, for you to come in and say, oh, this is a great opportunity for me, a lot of volatility, this is what I need to see, and I can do well on a day like today?
I learned a long time ago not to sell extension and not to sell panic. And if anything, panic is something to be bought into. Obviously, you have to have your risk management rules in place, but it's just an experience thing. I've seen this trade this morning happen before and play out before in different ways. The circumstance is always unique. I mentioned the Russia-Ukraine 2022 situation, which was one of the best short-term buying opportunities. By short-term, I mean like that day through that week of that entire year. In some ways, one of the best of my career. This is a very similar setup here, just a different reason that we got down there. So every reason, every unique situation, you have to think about what that unique circumstance is and ask yourself, is this different? But at the end of the day, I think that there are certain mathematical rules that the market has to follow. And that doesn't mean that the market couldn't go down off the open today. As a matter of fact, I said we could see, panic selling off the open today. It's just based on my experience, when you gap down at this degree of extension, I don't think I've ever not seen it a buy. Again, which isn't, as I say that, the other thing I've learned in trading over the years is that anything that can happen will happen if you're in this business for long enough. So there will be that time one day when I'm looking at a similar situation and I'm like, this is it, everybody get your buy button ready. And it doesn't happen. And we just sell and sell and sell. That will probably happen one day, but the probability was on my side, and trading is about risk reward and probability of success. So I thought the probability was on my side. And then what I was telling the team this morning is if you can then find the lower execution risk setup, take it and take it with size. I said to the team this morning, like, today should be a day where you make or lose a lot of money. And I don't say that every day. Like, I'll be proud of the trader this morning, today, who, after the market closes, you reach out to me and you say, Derrick, I had such a bad day today. I lost so much money, but I really went for it. I put a lot of risk on. I'll be so proud of that trader. I'll also be proud of the trader who says the same thing and is like, I had my best day ever because I caught that move that we were talking about and it worked great. Today is not the day to sit on your hands if you're a short-term trader. Today is the day where you got to put yourself out there. And at the end of the day, as long as you followed your rules and your risk rules, which is so key, at the end of the day, if you went for it, you should be proud of yourself regardless of what the P&L was at the end of the day. And that's how I feel. On a morning like today, there's just so much opportunity. I'm going to put myself out there, and maybe it doesn't work, and maybe I get smoked. But based on everything I've ever seen over the course of my trading career, most likely it's going to be the opposite.
So you say today was a great short-term opportunity for you. Let's talk about some of your best trades of the day so far today, and then I'll let you go.
I mean, so today I was very market like index focused.
Hmm.
So I'm just buying everything. I probably bought 25 different symbols this morning, but it was all based off of the index itself. So I wimped out on also adding exposure on the QQQs themselves just because I had so much risk on, and I was using so much buying power at a certain point this morning. So I wimped out a little bit on that, but I was buying AMD, so I had some QQQ exposure. I was buying the TNA in a big way, which is the leveraged IWM ETF. Bought a lot of that. I was buying, I mean, everything. Palantir, Chewy, Alibaba, PayPal, Solar Edge, Roku, um, uh, I said Palantir already. Peloton and Palantir, both of them. Snap, which got smoked on its earnings the other day. It doesn't. It almost. Obviously, we want to be long what's relatively strong because it's going to give you the most bang for your buck. But at the same time, I almost felt like the stock selection itself was the secondary question to being on the right side of the market with the thought process this morning or not.
All right. And Cyril from YouTube said, I did what you were teaching, Derrick. Thank you. It worked well.
Awesome.
So, yeah, great. Real quickly, you talked about this whole meltdown being really more about positioning and how everyone is so overbought in just like 7 names. The Mag 7 tech stocks are just like all anyone buys. When we come out of this, do you think we'll come out of this into a more balanced market positioning wise, with people buying stocks on a more broader basis versus just buying the Mag 7 and that being all anyone is trading?
I hope so, but at this point, I genuinely have no idea. I hope so. It makes a better market when everything moves. But I think it's too early to tell right now. The market needs to heal from today's trading session. It needs to heal through price and through time. We need to either correct back up further to these moving averages or have those moving averages come down to us as we correct through time. And then after that happens, and the setup can begin to happen again a little bit more, and the market can, tighten up at least to some degree. The market might stay loose. We might continue to have, plus minus 1% days, but I would not expect that we're going to get gap downs like we got today, every day going forward. I don't think this is like COVID. COVID into that down move. COVID into that down move was like this, but every single day to the upside and the downside. But this is not a environment right now that's reeling from shutting down the global economy because of a emerging virus. This is a positioning washout, and let's let the dust settle here over the course of the next few days, over the course of this week, and then I think we can reassess the technical picture, get more data and more information, and make a more informed decision on what the best way is to approach this market going forward.
All right. So after the close today, what are you doing as a trader to prepare to review today and then prepare for the rest of this week tomorrow?
Hopefully catching up on some sleep. This is why I don't look at the futures. I don't look at the futures. I don't want to be lying on my pillow trying to sleep, thinking about, how much money do I think I'm going to be down in the morning? So I gotta get back into New York City. I gotta catch a Long Island Railroad train at some point. I gotta do the afternoon meeting for the team, and I gotta be on the train. So I'm not going to be doing a lot of personal review. And I got this question last week from someone when I was doing the open house, I think. I don't do a lot of review anymore, to be totally honest, of my trades and my trading. It's not to say I don't do any. I don't do a lot. I highly, highly suggest that traders generally do a lot of review on their trading, especially if they're new. I'm just at the point in my career where it's just changed. When I was a newer trader, I used to work my butt off. I was the first person. I'm still like the first person in the office and the last person to leave. That actually hasn't changed. But it would be because I was reviewing my trades for 4 hours after the market closed, and then when the weekend would come around, I would spend 10 hours on Sunday reviewing every trade that I took for the entire week. My processes are so systematized at this point that I don't need to. I know already if I made any mistakes today. The answer is no, I didn't make any. I didn't make any mistakes today. I'm really happy with how I traded. But I know already if I made any mistakes today, and if I made mistakes and I know that I made them, I'm going to say to myself, oh, wow, I made mistakes today, and I need to make sure that those mistakes are never repeated again in the future. And that's it. So otherwise I know that I did the right things today, and I need to do the right things tomorrow, and I need to do the right things after that. And I'll have days where I'm down P&L and days where I'm up P&L. I was down more money at one point this morning than I've ever been in my entire trading career, and was basically able to fight all the way back. It just is what it is. I can't let the P&L bother me. I can't let the P&L make me do the wrong things. I just need to do the right things like I did today, again tomorrow, regardless of what my P&L actually is.
Great. That's a great point there, Derrick. All right, we'll end on that. For everyone who's with us live, we have a great audience here. Go to t3live.com/DOLive, t3live.com/DOLive to get Derrick's free ebook. Derrick will be back with me next Monday. I hope you have a great rest of your trading week, Derrick. Have a good rest of today. It's pretty wild out there, so enjoy it.
Thanks,
and everyone else, good luck in your trading. See you next week.